Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for March 26, 2023. Hope you guys are having a great weekend, and I hope you had a great week last week. Last week was explosive, as we had expected. And, you know, I know a lot of you are probably thinking, okay, this next week, it's got to be calmer than last week. I don't know. We have a lot of inflation data. Obviously, there's still some big stresses in the banking system. So we've got so much to talk about this week. I'm thinking it might run circles around this last week. But before we go into that, I just want to say, if you haven't tried out Forex Analytics, do so. It's only $1 for 10 days. Why wouldn't you want to try out Forex Analytics? This way you can be inside one of the largest trading communities around. I mean, if you haven't seen what our trading community looks like, you should. I mean, it is huge and it is massive. And you see, if you really even want to follow just the trades that I'm doing, like this is, and it's always easy to go back in time and say, oh, I bought here and I sold here. No, this is in real time. When I place a trade, it's here, unless something got triggered overnight, which I usually tell people the night before that I'm going to be putting orders out. But this is a trade room. It's not just me. It's other staff members here at Forex Analytics, other traders in the community, and even, I take losses. You don't think I take losses? Of course I take losses. You can see them clearly stated right here. Anyway, it is a great community because why not be around other traders that are trading and be able to understand why they're buying and selling, and you have access to me that way, and the rest of our staff. So make sure you check us out. $1 for 10 days is definitely worth it to you. And there's so many tools inside of our platform that I'm not going to go into, but make sure you watch the video right on the Forex Analytics site so you can actually see the tools that are available to you inside Forex Analytics. Okay, enough about that. We're going to get into the charts, and we're going to talk about everything that's happened. This is from last week's week ahead video, and I'm actually going to be doing a lot of drawing here as we go through the markets. The analysis on Forex Analytics gets updated throughout the course of the weekend, but I'm going to do live with you guys, obviously, as we, kind of figure out what the heck is going on this next week. All right. So with that being said, let's get into the charts and let's talk about what the euro has done. So the euro, right as of now, we are forging a lower high, and that's got to be, as a trend follower, you've really got to be aware that we are looking at, now. The euro trying to forge a lower high. And I know a lot of people are starting to think right now, well, if things progress in the Eurozone and we continue to see, these bank stresses, could the euro, drop back down towards parity? Sure. I don't think the 200-day moving average, which comes in right over here, I don't think this is actually off base. And let me actually rephrase that. I don't think it's impossible for us to get down there. In a period of risk aversion, the currency that usually comes into play is the dollar. Even if it's dollar bank or U.S. bank stresses. You remember the financial crisis. Well, some of you don't, obviously, but those of us that traded through the financial crisis, even though we had a collapse of Lehman Brothers and all the U.S. banking system just came crumbling down in the housing market, and it was mostly U.S. centric. There's still a rush for dollars because the dollar at this point in time is considered the reserve currency, and when people want dollars, they're just going to go seek out dollars. And so the dollar could definitely strengthen in times of stress like we're seeing right now. So anyway, I don't think that is impossible. But notice that we hit the 78% retracement, really the underside of this previous channel. And that is rejection. And I'm going to just tell you right now, in my opinion, as long as we stay below 109.25, I think the risk this week is that we slump back down towards, the 105 level, 106 level. We are being supported by the 50 DMA, but also keep in mind there's some pretty important data coming out this week regarding the Eurozone. We have inflation data. Everybody's going to be watching the German CPI, the flash CPI, which is Wednesday and Thursday morning, respectively, and then obviously the Eurozone CPI, which is going to be at the end of the week on the 31st. So just keep that in mind. let's take a look at the cable, because the cable, we had this double top possible setup. We made the false breakdown, as we noted last week, which was going to lead us to a rally, which it did. And now the sterling is stalling, just like the euro, shy of its high. So this range, in my opinion, looks like it's now shifting. So when I say that, that means it looks something more like this, instead of like a horizontal channel, or so I guess a horizontal channel. It's more of a descending channel, if you will. And that might be what the market's looking at now. It's still a consolidation, but you have to be careful that we made lower highs, stalled at 78% retracement. The risk might be that we slip back down towards the 200-day moving average. Now, out of the UK, Bailey does speak on Tuesday. He actually speaks both Monday and Tuesday of this next week. But I think the sterling is going to be more of a product of what's happening with the dollar, unless we have UK banking fears. and you can't dismiss that. I mean, it started in the US. We're seeing stresses in the Eurozone. And I'm assuming with rates going up the way they've gone up and remember the BOE just raised rates as well. With rates going up globally, it's just putting more stress on the financial sector. And, and England and the UK, one of their biggest sectors is going to be the financial sector. So just keep that in mind. So 50 DMA comes in right here. Like I said, I think the risk is, now that we've made a lower high, that we slip back down towards, maybe the 120 level this next week, as long as we stay below 123.50. Now, I'm going to take you over to the Aussie, because the Aussie, very bearish looking currency right now. And I'm going to say that because it's just not bouncing. And when you have if you have the market that just does not bounce, the risk is that the path of least resistance is going to be lower. So what I'm showing you right now is we can't even get back above the 38% retracement. So what that suggests to me is we are developing some sort of bear flag pattern that, if we see any more risk aversion, which I know that's going to be up for debate, and that's something that we are going to talk about here in just a couple more charts. But if we start to really slide in risk and we start to see stocks come under pressure, the Aussie is going to be one of the first currencies to come under pressure, because it just hasn't bounced. When you give a market enough time to where buyers, that have been accumulating the Aussie dollar, you can tell me the reasons why. Because stocks are holding up pretty well, so I'm buying Aussies. The China reopening, I'm buying Aussies. Australia is far away from the U.S. banking crisis, so I'm going to buy Aussie. Whatever the reason why people buy Australian dollars right now, the fact of the matter is they're not getting paid for being long. So the longer you sit down at these levels, the more risk there is, because now traders are going to be like, look, I'm not getting paid and things are getting kind of nasty out there. I'm going to get out of that. So then you're going to get people getting out of their longs. Then you're going to get people like us that are predatory. We're going to start shorting the Aussies. So keep an eye on the Aussie dollar. We start slipping below 66 cents. Then you have 65.50 below that. You start looking at, how deep can this longer term retracement go? And, can we make it to the 88% retracement down at 62, 63 cents? I think that's entirely possible if stocks start to roll over. So keep that one on the radar. I'm not going to go in the Kiwi, very similar type of situation with the New Zealand dollar, but I do want to talk about the dollar CAD, because, we've been looking at this as a very bullish setup. And I'll tell you, the CAD hasn't delivered us much, although I have been playing it this week, and I know a lot of traders have been this week as well in our community, because we played this wedge breakout, and even on Friday I saw a lot of people getting long on that breakout and buying the dip. But you can see this like minor wedge that comes in like that. We broke out. So now what I'll be looking at with the dollar CAD, because crude oil is so weak, we can look at that in a few seconds, but we start breaking above this 138.20. Now you have to start looking at, a move potentially up towards 140. That's what I would be thinking with the dollar CAD. And, this week out of Canada, there's not a lot of data, But at the end of the week, we do have Canadian GDP. So that is something that I think us as traders would be looking at as, at the end of the week. But watch crude oil, because crude oil, if you guys have not seen it, let's see if I have the chart up here. I don't know if I do. I do not. So let's just pull up a real quick chart of crude. And we're going to just look at the CL, just the continuous contract. You'll notice in crude oil, let's just do a quick analysis of this, just because I've done this on other charts. And if you watch our daily analysis, you guys know I'm bearish crude while it's below 70. You got to look for a confluence of a move down to 62, which will be right here. There's 161% extension. Also, the other reason why 62 is such a big deal, let's just go ahead and get this looking something like this. That's not it. The other 161% extension here. There we go. And we're already at that. But it is the horizontal support right here. Remember, I'm doing this from scratch. I already have this on my other charts, but you can see a lot of confluence down here at 62.5. So with that being said, and by the way, a lot of these patterns, like this flag pattern, points down there as well. Extension from the entire wedge or triangle breakdown. It's right here. That's it. 261% extension of this move. There we go. There it is. Okay. So with that being said, we have a lot of targets that take us down to 62.5 now, or 62. And so with that, then we have the dollar Canadian, which if that continues to weaken, the dollar Canadian should continue to break out, above 139, maybe up towards 140, and maybe even further than that, depending on how strong the dollar becomes. Now, I'm going to stop here, and I still got more currencies to talk about, because I'm going to talk about the yen, and I'm going to talk about the yen complex. Like when I say that, I'm going to talk about all the yen pairs. So I'm going to talk about the euro yen, pound yen. We're going to actually do some work on all those. I still have stocks to talk about, but I also want to mention at this point, our sponsor of today's show is going to be the Trader Funding Program. So if you want to learn how to access our money, and you want to trade our money, not risk your own money, and you want to keep 75% of the returns, check out the Trader Funding Program. You can try to access up to $1 million of our funds to trade. It's great, if you don't have access to larger account sizes. But you think you're good enough and you want to leverage up, your trading, try the Trader Funding Program. What's unique about what we do is that you're inside of the Forex analytics community for a period of time based on which assessment you take. Because you're trading our money. We want you to have trade ideas. We want you to be inside of a community. We want you to be able to talk to people like ourselves and to have, different ideas of what everybody's doing. So you're not left out there alone on an island somewhere. We want you in our community. We want you to succeed. We want you to succeed in trading our money because we keep 25% of the profits. So therefore, check out the Trader Funding Program. It's a great way to get involved in the Forex analytics community. Okay. Back to the charts. Let's talk about the dollar yen, because many of you, like myself, we were riding the dollar yen short. I closed all my dollar yen shorts this week. It's been a great ride. I'm sure some of you have been trading that as well. And I got some questions on social media and in our shows, our daily shows. By the way, if you're not listening to us daily for free, listen to the Flow Show and the F.A.C.E show, which you can get to those right in the links in this description of the video that's just below this YouTube video you're watching. Make sure you register for those. You'll know, and I've explained a lot why I'm not out of the dollar yen, or I'm out of the dollar yen, but I got asked several times, is this it? Is the yen going to continue to press higher now that, we've completed all these flag patterns and technical levels, and it looks like the momentum's slowing down? And the answer to that question is hell yeah. I mean, can we continue lower in the dollar yen? Absolutely. What's it going to take? Well, in my opinion, and you can see we completed that, that pennant there. What it's going to take, in my opinion, is it's going to take a breakdown of all these other yen pairs. And if you haven't seen what's happening in like the euro yen, let me draw it out for you. Major support being tested. You can see this big triangle formation. If the euro yen starts breaking down below 139, that is going to be one feather in the cap for all of the yen pairs to start breaking lower, right? So you see the euro yen, we start breaking below that 78% retracement, get a sustained break of 139. That is going to be bearish. Let's go to the sterling yen, pound yen, or the guppy. A lot of people like to call it the guppy, myself included. So, we got a triangle consolidation. Well, how about if this starts breaking down? How about if we start breaking below, the 618, or really we get a sustained break of 159? Where does this currency pair go from here? My opinion is probably a lot lower. There's another feather in the cap for all the yen pairs to roll over. Let's take a look at the Aussie yen. Well, the Aussie yen's already on its way, by the way. If you're not, we already talked about the weakness of the Aussie, and many of you know why I've shifted to Aussie yen shorts this week over dollar yen shorts, and you can see how it's been paying. Because we had the FOMC this week, I didn't want to have dollar yen exposure. I shifted to Aussie yen exposure, so that hopefully that made sense to you all. And we prayed on the weakest one. But how about if the Aussie yen starts really breaking down? Can we go lower? Now that we've, taken out some of this horizontal support here. Yeah, sure. Okay, so there's another feather in the cap for, yen strength, or, yen crosses to move lower. Let's look at the Kiwi yen. You got the Kiwi yen that's really approaching some very critical support right here. How about if that breaks? I mean, you can argue that just like the Aussie yen, whoops, that I didn't want to do. Just like the Aussie yen, the Kiwi yen is already on its way as well, right? So where does this one go? I don't know. You tell me. Does it go higher or lower from here if we get a breakdown? I mean, we're going to be giving up a lot based on all these buyers over the last few months are going to be, giving up. Let's take a look at the Canadian yen. Oh, it's already on its way as well. So you can see, one by one, we're losing support of all of these yen pairs, and all these yen pairs are starting to break. And if they all break, guess what happens eventually to the dollar yen? Well, the dollar yen is going to eventually probably come under pressure as well. So to answer the question from those of you that asked me, is the dollar yen, is it over yet? No, we can see the whole entire yen complex really start to roll over here. All right, now I do want to go into stocks really quick, because I have to admit, the stock market's held up very well. But that doesn't mean that that's going to continue. But let's acknowledge the fact that the S&P is holding up pretty well. You can see this, and I'm going to draw it out for you now. You can see this nice little channel consolidation that we've got. If you're looking for downside, that means at this point in time, if you want stocks to really come under pressure, see that 200-day moving average? That's been supportive all week. So a break below 139, I think, is going to open up some downside. But like I said last week, we really have to get below this level right here, which comes in around 3750. That level really has to break in order for us to open up some downside. But you can see the S&P is very well supported. One of the other reasons why I think the stock market is very well supported is because there is, money. When it moves, it doesn't necessarily all go out of the, everything leave the markets and go into dollars unless the shit is hitting the fan. When that happens, the dollar really starts to rally. Gold, by the way, still looks like it can break into all-time highs, which I'm not going to go into right now, but if you want more analysis, go to the live F.A.C.E show. I'm sure we talk about silver and gold pretty much every single morning. But when you start to see gold, when you start to see silver, you start to see bonds, which are rallying as well. Yields are coming down, which I didn't mention today, but don't worry. We talk about yields every single morning. So come listen to us live. When you see those three asset classes really start to rally together, what that suggests to us is that, yes, there is some severe risk aversion in the market. You know, when there's some severe risk aversion in the market and crap is hitting the fan, stocks really start to come down. So we're starting to see gold really catch a bid. It's near its all-time highs, or closing in on its all-time highs. It's, you know, trading around 2,000. It looks really bid. The dollar's bouncing. Oh, I didn't even go over the dollar index. I should probably do that as well. Look, the dollar index caught a bid from the 78% retracement. You're seeing the dollar bid up. You're seeing gold, you know, bid up. You're seeing the bond market bid up. When those three asset classes really start to catch bids all at the same time, that's usually a very good indication that stocks are going to come under pressure, and probably come under pressure aggressively. Something to note for those of you that, you know, are kind of newer in the markets. Look, 25 years of trading and seeing all sorts of market conditions. You listen to people like myself, the rest of the Forex Analytics team that's been around the block a few hundred times. You know, you listen to us because, you know, we do have that experience that most other people don't have in the markets. You know, when you have traders like myself, or Stelios, or Ryan, or Steve, or Paul, or, you know, or K-Man. I mean, K-Man was on trading desks for literally 40 years. You know, that's when you get that type of experience that shows you, you know, what can happen in these types of environments. So, guys and gals, I hope you all have had a great time enjoying yourself here. If you've enjoyed this and you think it's going to be beneficial for you next week, give us a thumbs up. Subscribe to this channel so you don't miss any of this exclusive content. And also, you know, come visit us on our free daily shows, the Forex Flow, or the Flow show, which is in European hours, and also in at the F.A.C.E show in North American hours. And also keep in mind, if you're in Europe or you're in the US, or actually globally, there's another time change going on, which always screws me up, because living in the state of Arizona in the United States, I don't change my clocks. I don't know why you crazy people do, but I don't. So therefore, it always throws me off every a couple times a year. Anyway, hope you guys and gals all have a great weekend. Thanks, and we will talk to you soon. Thanks for spending your time with me. Have a great remainder of your weekend. Bye-bye. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.